All right, so let's see, we're gonna start off. Start off on H4, right? So remember what we talked about? I believe it was, let's see, this wick, right? Remember, this is what we called out, or what we were mentioning on Saturday. And so you see it start to play out. You know, 1 second. All right, my bad. Anyways, so remember that we called out the fact that we are still bearish in terms of legs, right? High, low, retracement, right? Invalidation of bias, in my opinion, because this is the final leg there, and there's no real pullback inside of this leg, so there's no reasonable reason as to why this should break. So keep in mind, we pointed this out, and it's currently playing out. Right, so as we see, essentially now, as technically a major intraday, minor intraday, doesn't matter what you want to consider it, I'm now acknowledging my low and my high, right? Whereas we came to retrace, I believe it's H2, yeah, H2. Actually, let me do this. H2 50%, right? Perfectly tapped, meaning bullish order flow is still intact. But because this low took out the preliminary structure point here, this is now a solidified low based on low higher retracement. That broke, solidified low. What do we have then? Unwillingness, right? And we continued lower. And that's where we pointed out that there's a possibility we could have reached inefficiency there, but we didn't. And in fact, it was actually the wick there. And if you want to get extra technical with it, 50% of the wick. Right, you can see there's a final push-up candle before moving down. And if we break that even further, right, what do we see? We see inefficiency fill here, and we also see the open there, right? So if you were to reference the wick, the candle open, right? Because the buy to sell theory, the wick theory, right? You could see perfectly tapped. So from there, right? Keep in mind, we never use liquidity as a point of, as a bias influencer, right? Key example right here, equal highs, right? But we see a range, we see breakout, disruption, right? So now high, low, retracement, right? Back into potentially the final candle here. What that could have been an M5. That was actually an M5 wick there, as you can see. So liquidity was sitting there, but that doesn't mean we have to chase it, right? So as you can see, that caused bearish order flow to come into play, hence the strong move. Right, and now this, don't even ask me about this, right? Because this didn't happen on EURUSD. So really irrelevant to me. Oh, not irrelevant, but you could take it as a type of mitigation, right? Whereas even though it's very, very, I don't really want to consider it efficient data, just because the data here doesn't match the data here. So it could be considered inefficient, right? And do you guys understand what I mean with efficient, inefficient data? Not inefficient pricing. Inefficient pricing is what we just used, but I mean more of the finance side. Do you guys know what I mean with that?
It's just like data that's just not complete.
Not necessarily not complete, more so unproportional. And by that I mean the data showing one thing has to match the data showing the other, right? So if you want to compare it to like a stock, the only example I can think of the top of my head is the whole GameStop thing, right? Where GameStop in terms of numbers is doing absolutely shit, and you still see price skyrocket due to obviously the short squeeze. So that's a pretty much a, how do I say this, a disproportionate price, I guess, because it was, I'm trying to like emphasize it, or not emphasize it, but correlate it into how we trade. And the way that I see it is when the data does not support price, right, it's usually inefficient and it's unsustainable over time. So this could be inefficient and I'm just trying to ignore it because the data doesn't fit what is here. So it's not really relevant to me. But anyways, right, after that, we actually got a scenario here. Was this yesterday? No, this is this morning. This was this morning? Yeah, it was this morning, right? And so this morning we had very weird price action here, right? But I couldn't make any type of play here due to these candles, right? So if you really wanted to zoom in here, right? Key lesson 1, who's seen the order flow videos? Let's see what you see. Who's seen the order flow videos? What phase was order flow videos? Let me actually check that out. Oh, where's my phone? I believe it's phase 3. No, Falco, not you. But anyways, well, not Falco, I'm sorry, not you. Fortunato. But what is, who's seen the order flow videos? That's question 1. I haven't even gotten to what it is or what you see. No, what is order flow? You haven't gotten to it? Okay, cool then. And has anybody gotten to that? I know it's still relatively early and that's pretty deep in the course. Let's see, we have how many people in here? We have 20 people in here. Has anybody reached to the point of the order flow video? And I know you guys have been watching because I'm seeing the login activity. Okay, cool. So you guys might not be that far. So order flow is essentially a sequence of mitigations. That is how it is seen, right? So how do you differentiate strong order flow, weak order flow?
Inconsistencies.
No, not by momentum. Exactly. Not only number of mitigations, but momentum too. Exactly. So right now, look at this picture and tell me what you see. Right, somebody can annotate. I don't mind. What do we see and what does it mean? Those are the 2 most important questions you ask yourself. Ooh, that's going on Twitter. I like that. I like that. 1 second. But anyways, who wants to annotate the screen? Let's see. Okay, what is too many mitigations? Show me on the chart. Go for it. Exactly, right? Those are some ugly squares, bro. All right, anyways, can you delete that, please? All right, cool. So here, right, structured order flow, right? Structured order flow, right? But, right, as soon as we have our new structural range intact, right, notice how far deep retracement we come, but we are still mitigating and we still broke structure. So we are generating bullish movement. So, but this movement is expected because it's carrying not only structure, but momentum. It's expected to create a new high, right? So this has failed to create a new high, and we come back again. We then come back up here. Even though we broke a scalp high, we still haven't taken out this high. This is now becoming, it's taking too much effort to take this higher, right? So it even came back here again and here again, right? So that's 1, 2, 3, 4 mitigations, and it's failing to create a high, meaning this is weak order flow, and it's hard for it to sustain itself over time because it's taking too much effort, right? So inevitably, right, we get that mitigation, but now let's look at it from the other side. Inefficiency, Wick. So you're telling me it took 1, 2, 3, 4, 5 mitigations total to reach this high in price, whereas it took, well, in order for it to give you that bullish push, whereas it then took 1, 2 mitigations to generate the opposite move. So this is strong order flow, this is weak order flow. Does that make sense? This is something that I really held off with wanting to show you guys on just Zoom because I feel like you guys need to watch the video in order for that to make sense. But you see what I mean? Weak order flow versus strong order flow. If you can differentiate them and see them, you can more than likely catch direction. Right? So now let's go to EURUSD. Right? Because this range here was a bit misleading to people. Right? Before that though, right, in the pair breakdown video that I'm sorry has no audio, right, I said that this low was our target in terms of selling because we were going to reach here, right? Final push down, wick concept to then create the move up. As you can see, we came down and gave a proper bullish break, right? This is the pullback of the high low retracement, unwillingness based on inefficiency there, right? So that's low high retracement. I personally wanted here, but we didn't get it, and that's because $45-minute wick, right? As you can see, it was really a weird entry for me. That's why I didn't take it. But if you wanted to go off that M45 wick, then it does make sense. But as you can see, it's very choppy, and this is extremely hard to catch, in my opinion, right? Unless you wanted to play based on reaction. I don't even think that gave much of a reaction. Yeah, it didn't, right? And this was right before New York, so I wasn't even up for it. But anyways, right, this range was a bit weird. All right, so let's acknowledge what's happening. right? First thing I see before even looking at a chart. Actually, let me actually annotate this. First thing I see, bullish momentum, bullish climactic movement. As we come up higher, we have a diminishment in volume. So I can expect a pause in price. And because we're already in a premium, the only way I'm going to take a trade is if you take, or if you wait for it to show its hand. Okay, so what am I seeing? Right, final structural range intact here. So what happens after that? We come down here, create a low, create a new high. I don't want to consider that a break of structure because after we took out the liquidity, we came and took out structure. So we have a liquidity grab. So I'm still referencing my structural range, right? This here is a liquidity grab. So I'm still acknowledging this, right? So if we're still bullish, right, I'm looking for bullish order flow. So what am I going to do? Reference a POI, right? Inefficiency wick or M1 wick, M3 wick, right? So what happens? We come back into inefficiency and we then come here. But so realistically, this mitigation should clear the high if we're continuing structure. So what happens? We don't. We come back into an SC. Right? Did it go into the wick? Yeah, it did. As you see, perfectly into the wick. So technically the SC is inside the wick. Right? But I would have just used this to be safe with my point of validation at the high. But anyways, this isn't a sell that I'm trying to take. Why? Because we're bullish and we're seeing bullish mitigation, bullish order flow. But bearish order flow kicked in. So this is now unwillingness. Right? So this unwillingness, in order for it to show its hand, it has to take out a low. But what happens after that? We actually come into the wick. So I'm seeing bullish order flow, bearish order flow, bullish order flow. What is that called? No man's land. That means you stay the fuck away. Simple. So now I'm waiting for this to show me its hand. Right? So once again, after we see the bullish order flow come into play, it now reacts from another point of interest. Right? So it's iffy because I cannot take a trade here and I cannot take a trade here if bearish order flow is intact. That's just one of my personal things because I've taken a lot of losses like that. Right? I cannot take the trade a buy position even if this is a BOS, right? Because of this, right? So this is where that kind of linear thinking versus actually thinking with logic comes into play, right? So theoretically, thinking linear would be mitigation, BOS, retracement, continuation. That's a linear way of thinking, right? Whereas now I'm acknowledging, for one, we're in this range to begin with, right? So I'm acknowledging order flow to the upside and order flow to the downside. So who's going to win? Right, that's a question. Who's going to win? If I see bullish order flow and I see bearish order flow, who's going to win? Trick question. We don't what? You don't know. How can you make a judgment? You know what I'm saying? You can't make a judgment if you see bullish order flow and bearish order flow intact at the same time. So what happens? Bearish order flow outpowers bullish order flow, takes liquidity and takes liquidity. But immediately after doing that, right, it came back to preliminary level of structure and it even took the leg out. So this is now a liquidity grab, right? So after seeing the liquidity grab, what do we see now? What is this? I said one thing in the free channel, but I didn't want to say the other thing that it is. Oh, these fucking dogs. Oh. Shh. Can you guys hear the howling? Hope not. Oh, okay, cool. I didn't think the mic would pick it up. But yeah, that's optimism, and that is disruption. So we see a liquidity grab and we see disruption. So I now see this as a clear structural range, and it shows a bullish narrative. So now is when you want to look for buying opportunities because of the momentum, right? And if you really want to dive in here, what do you guys see? What do you guys see here? Order flow wise, what do you see? Just, no, not in terms of Wyckoff, in terms of just overall technicals. What is happening here that generates this? What is the cause of this? But yeah, the consolidation is the cause, but what is the cause inside of the range? Mark it out. Somebody mark it out. All right, I want to see what you guys see here. Let's see. Exactly. Perfect. Right. So the way that I'm seeing this now, right? Can you delete that, please? The way that I'm looking in the range, right? We see, well, actually, let me do this. We see high, low, retracement, solidified high because we took structure and we mitigated something, so we're in bearish order flow. However, bullish order flow comes into play, right? So now we're stuck in a range again, just like we were in this entire picture. You do this instead. Cool. So what am I saying now? Bullish order flow, unwillingness based on the mitigation here, and then the preliminary structure break. So what happens after that? This is probably a 30-second time frame move. Let's see. Yeah, as you can see, 30-second wick there. All right, I'm deleting this so it makes more sense and I don't have a bunch of mess on my screen. All right, so bullish mitigation, liquidity grab, right? And this actually does not mitigate anything here. Since this does not mitigate, and it actually took out the point that was mitigating, what is this now called? What is this? Disruption, exactly. So order flow disruption, but the order flow disruption is not mitigating anything, and it's still continuing lower. So what is this called? Right, even though there probably is some bearish order flow here, even though it's super messy, as you can see, right? Now that we're seeing this, right, this is, in my opinion, an unsustainable move, because we're not mitigating anything, but we're continuing lower, right? And if we're looking at volume, right, there really isn't a too big of an increase, but this isn't the biggest confirmation for me. This would be more so confusing in real time. But I'm just more so referencing what happens. right? We see a low, and if there is bearish order flow at the time, or at this point in price, then we should realistically be chasing that low. So what happens? We don't take out the low, but we then take out structure, right? So what is this now? Exactly. And keep in mind, this is optimism inside of optimism, inside of original optimism. So optimism, point of invalidation at the low, and we see below a 2-pip stop, and boom, this is where you see the move. Right, so that's the only realistic continuation we see here. And this is still even trailing here, 30 to 1. Right, and this is actually a sequence I love to see. This is a sequence I see a lot. This is a sequence I love to personally see. Right, but though keep in mind, right, narrative portrayed, structural confluence. Right, that's what we call a high probability scenario. Right, makes sense? You saw it as distribution, and that's fine. Right, but what were your signs for selling? What are your clear signs for selling? Besides your personal want of wanting it to go short. What is your, let me hold on 1 second. Right, what is your reasoning for selling if it's distribution? Because don't get me wrong, I'm pretty sure you could have got a decent sell scenario. Like off the bat, I see off the bat, if you're thinking, it really just depends on if you're thinking continuation or you're thinking reversal. If I'm thinking reversal, I see liquidity grab because we took out preliminary level structure, and we see the mitigation here generating bearish order flow. But as soon as I see this, I'd probably leave because we're starting to pause and start to reverse before we take out a low. So it really just depends on if you're wanting to catch a reversal or if you're wanting to catch a continuation. But if you're wanting to catch a reversal, let's also think where we are in price. Think here. Right, this is where we are in price. This is the final leg down. If you're selling here, what are you selling for? A pullback? That doesn't make sense. It's irrational. You know what I'm saying? Yeah, so you just have to be able to justify whatever you're trying to take as a bias. If you can't do that, then it's really hard to create a sustainable model, a sustainable plan, and you'll probably be frustrated half the time. But yeah, I mean, other than that, that's pretty much all I had for today. I know you guys were struggling with the range earlier today, so I was like, you know what, I'll just cover it on the call. But anyways, let's see, what was I gonna say? I still need to figure out the direction that I'm gonna take with the pair breakdown, not the pair breakdowns, the previous markups, because I caught people sharing. So I'm probably, whenever I do markups, I'll probably just like make a quick recording with no audio and just show all the markups. Like, let's say this is one of the markups. I'll just create a recording where it shows 1, 2, 3, 4, 5, and you guys can just pause and read them because the quality is fine, right? You guys can see this on your screens. and it'll just be like a 10-second video, so it also won't hurt us in terms of bandwidth use. But I think it's a reasonable solution. The ones that are already in the Discord, like I said, I'm gonna just leave them there. That's cool. But yeah, I think that's a reasonable solution. Yeah, I just want to make it easier for all of us, you know? I don't got time to stress over people leaking. Like, honestly, it's getting pretty old. Oh shit. Whenever you pause. Oh, that's right. Whenever you pause, you have to. You will see the watermark. That's right. Damn. That's tough then. Let's see. Let's think. Let's try something. Actually, I don't want to show you guys my IP. I'll figure it out. I'll figure it out. And I'll tell you guys how to go about it. Yeah, other than that, I mean, the content's out. Make sure you guys go through it, like you said. And yeah, do you guys have any questions?
No, we're good.
Chilling? Yeah, I mean, I think the explanation makes sense, right? Yeah, yeah, now I can actually like fully show you the concepts now that you guys have the material. Let's see. Yeah, I'm gonna be probably yeah, please don't send me journals this week. Please make sure to go through the material, study the material. Please don't bombard me with questions, right? The process is still there. The principle of the process is still in play, right? You're not gonna get this stuff day one. So consider this a new chapter in the same journey, right? RCV chapter 2, maybe chapter 3, 4 for some people that have been with me for a while. But yeah, unless you guys want to bring up a topic, anything. Looks like yeah. Yeah, man, our developer worked really hard on that, bro. It's super hard to breach through everything we have in place. It's very hard. But I don't want to jinx myself, obviously. Question I've been in my. Oh my god. There's bro, read the Discord and look at the website. That's all I'm gonna say. But yeah, guys, I'm super tired. You guys would not believe what happened over the past 24 hours. I don't want to bring it up, but yeah, been a long day. But yeah, hopefully that worked. I'm gonna make sure to upload this right after I'm done with the call. So I'll probably upload it right away. But yeah, anyways, I'll see you guys on Saturday.